years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Monday, November 24th. I am trying to do this in my parents' house in New Jersey. So it's going to look a little different. It's going to feel a little bit different. Hopefully it doesn't sound different. The content's going to be exactly the same. I just want to go over some stuff. So in the market, we're going to go over the Black Friday deals. You're going to hear them up front. I'm not going to linger on them because I've said them for many, many times. Waiting for dips. We're going to go over what about this short week. By the way, I'm looking at my iPad. I can't do this on just my MacBook screen. So we'll go over, there's a new $1 trillion company, if you haven't heard of it. And it's been in the Daily Stock Pick core portfolio since 2023. Stocks, how do they price things in? We'll kind of look at that. Some huge opportunities. My Tesla drive from Atlanta to New Jersey. I got some big things to tell you about that one. And maybe there's a bubble, but you know, you can look at PEG ratio. We'll go over crypto. We'll go over a bunch of things. But I want to start out with the sales, okay? And I can't look at myself and do this. So if the screen freezes, if something happens, hopefully nothing messes up. But this is your Black Friday sale, TrendSpider. You get this amazing charting tool that helps me find entries and, more importantly, when to trim, sell, or add to positions based on technical indicators. Again, I point people towards this 52 trainings per year on the advanced, but you can get it for standard. Again, it's 65% off. This only lasts for 4 more days. This is the best sale of the year. Look at that regular price, $321 down to $74. So this is the best. Plus, this bonus offer, 1 month of Sidekick AI. You've seen me use Sidekick to look at NVIDIA, look at Applied Materials earnings. You've seen me use it to analyze a portfolio. Get a $7 2-week trial and just go and load up Sidekick and analyze your portfolio. It's an amazing, amazing tool. Then you've got this bundle. Okay, this is Seeking Alpha. It's premium and alpha picks. Premium is what you're going to see me use to go over the quant, to find stocks, to find opportunities, things of that sort. And alpha picks is a data-driven portfolio. And you again, you get 20% off your first year of alpha picks. Look at the performance. 240% versus 75%. You get a pick on the 1st and the 15th. If it's anytime, if that's over a weekend, you'll get it the days after that. But again, you save $100. How do you get these deals? Well, you go over to Linktree. Okay, Linktree has everything. You can get Seeking Alpha Pro. You can get Premium, which includes a 7-day free trial, Alpha Picks. Go and explore all of the offers that I have on there, including getting a new Tesla, because we'll talk about that one a little bit later. But where are we in the market? So the chart, you can see that 585 that I kind of pointed out right there. Friday wasn't a bad day. It was a pretty good day. August 13th, that was where 585 was hit, and we bounced back. What happened this time? It kind of used it as support. Where are you trading right now? 595. You're up about 1% on the Qs. So again, the MACD down a little low. The RSI is at 33. That's a 4-hour look. Now you look at the weekly, and the indicator seems stretched. The MACD is 20 points above the oscillator. The RSI is in no man's land at 55. And you can see we're still above that trend line. And that trend line is anchored to COVID, the COVID low. And it touches, you go below it. Below it has always been a buying opportunity. Now that trend line, it's down around the 560s. We haven't hit that. Last week's low, 580. And remember, 585 was that low. Now, where are we going to open up? Where are we going to, close today? Nobody knows. And you can see those volume charts. Those volume charts on the right-hand side, that's anchored right at the April lows. So where are people buying? They're buying between 595 and 611. There's not a lot of people that are still down in this area. So again, nobody bought down here. Everybody's buying up here. So this seems like a fairly good area. But again, if you're waiting for dips, John points it out here. How often does stock market decline? 1%, 50 to 60 times per year, 3%. So if you're waiting for drops of 10%, we're already down at least 5%. That's 3 or 4 times a year. If you're waiting for a 10% drop, we had that in April. If you're waiting for a 15% drop, again, we had that in April. If you're waiting for a 20% drop, we had that in April. So my point is time in the market beats the market. And I've talked about this before. Earnings, we've beaten. Economy is good. And the Fed expected to cut rates. More than likely, they're going to cut rates. And if you look at this, here's how the earnings season is panned out. Ryan puts it, Mag 7 earnings up 18% year over year in Q3. The lowest since Q1. That sounds horrible. But the other 493 up 14.7%. That's the big 7 making a lot of money. But that doesn't mean that the other 493 aren't doing well. Again, the economy's in a pretty good space. So let's start talking about this short week, okay? The best weekly planner out there. If you've just gotten Seeking Alpha Premium, this comes out on Fridays at 3 p.m. and it sets you up for the week. There's a volatility watch, okay? There's Tuesday earnings watch. You've got all of the things that are happening. And then you've got Wednesday. There's another earnings watch. All Day Starbucks and Coffee Costa Coffee are two of the notable companies participating in the European Coffee Symposium. Maybe that's pretty good. Again, it goes down into granular level. Oil watch. The energy sector will be on spotlight ahead of the OPEC Alliance major scheduled meeting. So it gets you out there. And one of the things that they bring up in this one, a Burry teaser. Michael Burry just teased that he had a huge announcement this week. And FYI, maybe the big announcement is that he opened up a Substack. I already have a Substack, and I will save you. Here's the thing. He's charging $400. You can get his Substack page right here. I'll link it in the newsletter. But he's charging close to $400 a year. Let me save you $400 a year. He's going to tell you to sell. He's just going to there are people paying $400 a year to have him say, sell. We know what he's doing. He closed down his portfolio, his hedge fund. Probably, I don't know why why does a billionaire charge $400 a year for, again, we already know what he's going to do. So again, you can say thank you later when you try and sign up for his thing and you pay him $400 and then he puts out one note and he deletes it 5 minutes later. That's kind of the track record that he has. Now let's talk about a new $1 trillion company. Eli Lilly exceeded $1 trillion for the first healthcare company. Okay, it became the 10th company in history of the stock market on Friday. It's been in the daily stock pick core portfolio, which you can follow on Savvy Trader. Okay, the core portfolio is down here on Savvy Trader. Just go to Linktree and click on that. It is in Savvy Trader, and you can see it's been in there since 2023. Why? Because in 2023, we were not only in an AI market, but we were in a GLP-1 market. I love their CEO. Great management. They have had phenomenal profits with growth. It is a hold in the quant. Again, it's a hold in the quant. I don't think it's ever been a really strong buy. No. There it was back here, a strong buy at $732. And don't you wish you got it at $732 because it's now over $1,000? I said this was a $900 stock. We've gone over $1,000. It's very expensive, but the growth has been phenomenal. You can see the valuation, 44 times forward earnings. That's crazy, but the PEG ratio, we're going to talk about the PEG ratio later. It's 1.4. Why? Because they're growing at 48% revenue year over year. And if they get the GLP pill version, and I don't know anything about pharmaceuticals, but when we look at Wall Street, what's their price target? It's 4% down. Am I buying at 1,060? If you believe that they get the pill version, let me just set up a scenario for you. Imagine going to Arby's and getting the meats, okay? And then being able to drink a large fountain Coke, not Diet Coke, real sugar Coke, and getting a bucket of curly fries. And then being able to take a pill so you never gain a pound from that type of meal. That's the world America wants to live in. And with GLP-1 and Medicare just negotiating lower prices so that it can be covered, yeah, they're going to get a lot of money. Now you might say, well, Novo Nordisk is in there too. Well, Novo Nordisk, it's the rest of their stuff. As the Ozempic pill it failed to slow Alzheimer's disease. So Novo Nordisk, their pills aren't working, and it's down 10% in pre-market. And we can go and look at Eli Lilly, and we can chart it against Novo Nordisk. Let's just do that. Let's take this out, and we'll look at Novo Nordisk. And again, this is what Seeking Alpha Premium allows you to do, is take a look at these other opportunities. And you can see over 1 year, Lilly's up 41%. Novo Nordisk is down 53%. And if I just go in here and look, I actually had it compare Lilly and Novo. And I had the AI look at both companies, growth performance, profitability metrics, return metrics, earnings power. There's the growth drivers of Eli Lilly. I will put this in the growth drivers of Novo Nordisk. I will put this in the newsletter so you can do it. I will post that. But in my mind, it's not even a competition. I don't know anything about the pharma business. I don't know anything, but I do know that Eli Lilly has been the leader in that space. And for me, I want to invest in the leader. So let's talk about some things that stocks do, because you can see QQQ, we're down here. I want to reiterate this one, and I'll put the words in. I think it was Jimmy Investor on Substack pointed this out. Markets don't price in what has happened. They don't care about what has happened. They price in what investors believe will happen. Okay, the price equals an embedded expectation. Instead of asking, is this stock cheap or expensive? The correct question is really, what expectations are embedded in the price, and do I agree with them? That's the thesis. And 50% of my portfolio, by the way, 50% of my portfolio is Apple, which is only down 2% from all-time highs. Google, you're at all-time highs. The S&P down 5%. Again, if you own some of these other companies, it's about risk reward. Yeah, did I know that Apple was going to hold up as well as it has? No. But Apple, again, 272, 4-hour algorithm got you out right there with a little gain. Am I getting out? No. Why? Because I'm in Apple. I like it down there at the 4-hour algorithm. I'm sorry, the MACD is right on the oscillator. The RSI is at 54. If you go and look at a weekly, is this one stretched? You bet it's stretched. It's going to need to take a break. Now, the question is, what's embedded in the stock? Well, I don't think Apple Intelligence is really embedded in the stock. They haven't started spending on AI, and they are getting rewarded for it. They will integrate with other AI people, not having to spend the money that some of the others have spent. But let's talk about some of the AI opportunities. You know, Bitcoin, by the way, is down 33% from its all-time high. Do I believe that's going to make up that 33%? Absolutely. Do I think Dogecoin will? I don't think so. MicroStrategy, unquestionable. Coinbase, 46% below its high. I absolutely believe in that one. Ethereum, I believe in as well. Palantir, yes, I believe in it. Meta, yes. Tesla, yes. Nvidia, yes. Microsoft, yes. I mean, you go up, up, and up. I think we're in a good economy. And you look at Melania Coin, 99%, Fartcoin, 93%, Trump Coin, 92%. If you're in those, again, what's the thesis on those becoming actually good? Trade them. Don't invest in them, trade them. And Goldman, the large cap stock with biggest increase in short interest, and one is still a buy. It's Albertsons. Albertsons, the grocery store chain. We saw Walmart last week report record earnings. That one boosted the stock by 6% while the rest of the market was down. Here's Albertsons. Albertsons is a great stock, and its short interest, 10%. Wall Street thinks that this one is worth $23, 34% upside. Maybe that's a good opportunity. Again, opportunities, go and find them. I just showed you an article and then I found Albertsons. Maybe that goes in a watch list of yours. Maybe you shop at an Albertsons market. Maybe that's a good one. I shop at Walmart. That's why I hold Walmart. I switched from shopping at Target to Walmart. That's when I switched my investment. Now, memory supply remains tight for AI computing. Wedbush is going over all of their memory stuff. Okay. One chip company, I own Micron, but one chip company just went to a strong buy in the quant. The quant is going to upgrade this one to a strong buy right there. Strong buy 203. If we look at the 52-week range on this one, this is between 267 and 76. And I've pointed this one out many times over the past couple of weeks. AMD weekly chart, we knew that this one was going to come down. You knew it from the past performance. Has it come down enough? I don't think so. And when you look at that momentum, my guess would be we probably have a little bit more downside on this one. The valuation certainly stretched, but the PEG ratio is 1.22. And that's why it's a strong buy. Now, Wall Street says this is a $282 stock price, 38% upside. I like that one. But remember, this isn't a 1 week, this isn't a 1 week investment. If they come for the semis again this week, the gap fill goes down to 200. Okay, $200 at 1769. That's where the 200-day EMA is. So if that's a support level and you start to fill that gap, you might get down to 169. So now I want to go over a couple of things about my personal journey from Atlanta to New Jersey last week. It was Friday. I think I left at about 10:30 or so in the morning, had the dogs in the back. And Tesla, you can see 4-hour algorithm had us out here at looks like about 440. You're trading at 399. 400 right now. Great to use the 4-hour algorithm to try and get out and monitor your, if you don't want to own Tesla outright. But I want to point out something. I got the new FSD full self-driving 14. Okay. My car, I left at 10:30 in the morning. Once I got out of Atlanta, I felt very comfortable starting full self-driving on the highway. And I was like, okay, let me try this. And I love full self-driving. On long drives like that, it's fantastic. My car drove me from Atlanta to New Jersey. The only time I had to drive once I started using full self-driving was at one charging stop where it wound up going into the Sheetz parking lot and not finding the chargers. Other than that, it drove me completely. Didn't even ask me to put my hands on the steering wheel. I literally had my hands crossed. I was laying back in the seat. I wasn't completely down. I was still aware. But if I look down, even look at my phone, it warned me a couple of times, but you just look up and then it'd say, okay, you can drive again. But the only time I drove was in that Sheetz parking lot. It would back into the charging spot and all I had to do was go out there. So I love that Tesla is getting an opportunity. And is Tesla losing the robotaxi race to commercialization? I disagree with this article. Why? I believe that while Tesla doesn't have a ton of cars out there like Waymo and Zoosk currently do without drivers because their Austin trial right now has safety drivers in the driver's seat, I believe they could flick a switch and have an entire fleet of cars. And there are people out there who would send their own car out to go and make money and allow it to drive themselves. So they have a fleet of cars that I think can turn up. And then you want to know another reason why Tesla's a good one? Here's Elon stating it. Most people don't know that Tesla has had an advanced AI chip and board engineering team for many years. And he outlines how they are going to be a major, major chip player. They might even take on NVIDIA. But again, he wants to dominate chips. The major AI chips include NVIDIA, AMD, Intel, and Broadcom right now. If Tesla is one of those, you're not even pricing that into the stock. And it is expensive. Make no mistake. You are trading 236 times forward earnings. The PEG ratio is 7.29. Is this the best investment in the market? No. Elon thinks it's going to be the most valuable company in the world. I question it, but again, it's expensive. I prefer to trade it. And so there's my 4-hour algorithm. You can see the entries and the exits. The reds are losses, the greens are gains. And for many, many years, while this was fluttering between 200 and 400, you outpaced buy and hold. Now, I'm okay because this one actually makes you 52% between, you can see 18%. Your average win is 18.55%. Your average loss is 4.37%. If I can continue to maintain an average win of 18% and an average loss of 14% on each trade, I'm going to feel more comfortable trading a volatile stock like this. That's the benefit of the 4-hour algorithm. And it just triggers you, and you can set up alerts so that you get a text. You don't have to sit there and watch charts. And if you're investing in AI, I want to bring up something because this may be one of these moments that they talk about in history. Because Mark Benioff, the CEO of Salesforce, he said, I've been using ChatGPT for every day for 3 years. He just spent 2 hours on Gemini 3. I'm not going back to ChatGPT. The memo came out and it was released, I think, at the Wall Street Journal from Sam Altman to his employees saying, hey, Gemini has leapfrogged us. Google has leapfrogged us. We have a lot of work to do. Now you're starting to see some leaders in AI actually recognize that Google is no longer playing catch up. Google is in the lead. And so then you look at OpenAI, which has to raise money because they're losing money, versus Google, which is actually cash flow positive. And if they start to lose search revenue, which we've seen hasn't happened, and that's what the street was worried about, then it's just, this is going to become a much more valuable company. You can see from the April lows, you had a 1.97% gain right there. You had a great 33% gain. It got you in here October 14th at 247. You're trading at $312. It's up 5% today. This is a great, great stock. And again, Benioff puts it in there. You can see there's even an article. And what's interesting in this particular article is that Seeking Alpha went over to ChatGPT and asked both Gemini and ChatGPT about the others. Benioff's comments indicates that Gemini 3 made a strong early impression on high-profile user, but it is not in itself evidence of a decisive technical advantage. Independent benchmarks, this is from ChatGPT, and sustained real-world performance will determine whether the leap he describes holds up. And by the way, Gemini says, ultimately, his post is very positive data point that speaks to the power and potential of the most recent advancements in AI technology. Now, if you go and look at Google, is this one a super strong buy in the quant? No. But in Wall Street, they love it. They love it. 65 analysts total, 44 have it as a strong buy. But you're opening up above the average price target. So you have to find those opportunities when they are opportunities. It's expensive right now. 28 times forward earnings. This was trading at 17 times forward earnings earlier this year. But its PEG ratio is 1.8. So maybe it's a good opportunity to get into a large cap tech stop. But is there a bubble? Is this an AI trend still our friend? Steve goes over this one, okay? If you're worried about a bubble, Steve Kress literally points you to 4 stocks that can hedge against a bubble. And this Investing Experts podcast that he was on, he goes over 6 stocks, including 3 that I own: Micron, COMM, and Celestica, with growth and improving valuations. He shows you how to use Seeking Alpha to find these stocks. But he's literally handing them to you on a plate. And this is Investing Experts podcast. You can listen to it on Spotify. You can listen to it anywhere. So listen to him, watch him use the tool to try and show you how to evaluate stocks. And again, I point you to getting Premium and Alpha Picks. Premium, you can get a free 7-day trial, by the way, just by going over to Linktree and using this 4th link. You get a free 7-day trial. Go and just follow along with Investing Experts podcast with a free 7-day trial. And Shai, we talked about the PEG ratio. This is price to earnings to growth. Okay. There is a very interesting, PEG ratio. Steve has said it was his favorite. When he told me it was his favorite a few years ago, I immediately went out and did a bunch of research. It's now my favorite fundamental as far as earnings and growth. Because under one usually means that it's mispriced in the market. We talked about the stocks being priced in, it's not what the stock has done, it's what the stock is going to do. Price to earnings to growth under one usually means that the market's not pricing in the growth. Over two, it starts to push into, hey, you're paying too much for this stock. And Shai points it out here. Go and look at your own tool, whatever you use for fundamentals, but highlight the PEG ratio. It is by far my favorite. Okay. And Seeking Alpha, what about the crypto market? What about the crypto market? Well, we talked about how Bitcoin, I can go over here to the watch list. And yes, I provide you these watch lists when you sign up for TrendSpider. But Bitcoin right here, again, it's 24 hours. So it's 7 days a week, 24 hours a day. We talked about maybe it gets down to that 77. 4-hour algorithm had you buy here at 84,000. And right now you're trading at 86,000. But I pointed out on the weekly last week, do you recognize anything that looks similar between these three? Okay. When the RSI gets down below there, it seems to signal that potentially a comeback is up. Now, it doesn't mean 100% of the time that you're going to time this thing, but that RSI on a weekly is down at 35. The last time it was down at 35, we saw that Bitcoin went down 78% during that time. You still had time to, but boy, don't you wish you bought at 19,000 in 2022? Because you'd still be at $86,000 per coin. So use your technicals to find opportunities. And again, Seeking Alpha, has the crypto market bottomed yet, or will it go lower? They ask their experts. And so if you want an expert's opinion, there you go. And I want to point it out too. Money managers are gearing up for international. Remember, if you're worried about the valuation in the US, they're saying in 2026, international may continue to outpace. Now, EEM is an ETF that they bring up. It's iShares MSC Emerging Markets. I have never invested in this one. I've never really done a lot of international investing. But what I like about Seeking Alpha is you can get a quant rating for an ETF, and they're saying buy. And when you look at it, the momentum is fantastic. 1 month return, it's minus 2%. But you look at the S&P, and that one's even down more. Now, the 6-month return, 16%. 1 year, 26%. And you look at the 3-year return, 52%. Again, when you look at all ETFs, this is doing far better. So maybe it's a look at international markets. And remember, so here's a great clip. I want to bring up this clip because this is Robert Frank from CNBC interviewing some of the money managers of the very wealthy. And they put it so well. 75% of these people own public companies, some own both, blah, blah, blah. They go over this. But the point that he makes is you're not investing for next week or even next month. When you have pullbacks like this, the bigger the pullback, the more the rich start to buy. And that's essentially what my strategy has been with Apple, with a lot of the other stocks that I've held forever, is as the dip got worse, I started to buy more because I believed in those companies. Again, I still believe in Apple. It's 50% of my portfolio. So you've got to find those opportunities. Now, do I think that people should put 50% of their portfolio in Apple? No. But I'm not giving you financial advice. This is mine. You have to determine what your risk factor is and what your tolerance is. I'm fine with holding Apple as my safety. It's basically been my savings account for a year. So remember, TrendSpider's having their Black Friday sale. Seeking Alpha's having their Black Friday sale. You can get it all on Linktree. If you have any questions, even my email address is on Linktree. The best way to view this podcast is actually on Substack. Substack, the newsletter comes out every day. I give you all my notes with all the articles, every chart that I went over. I usually publish it right here. If you don't get anything, you can literally just reply to the email that you get every day. It is free, 100% free. There is a paid section. There's an education section. But again, those are specific. But every day you're going to get a newsletter. So if you have any questions, you can go over to Linktree. You can email me directly or just sign up for the newsletter and reply to the email. Okay, I'll talk to you later. Bye.
Every morning I wake up to the sound of the trading